Hi, this is Mike Maloney with Jeff Clark once again. Jeff, how are you doing?
I'm doing great, Mike. It's great to be back with you again, of course. So, we got lots of fun stuff to talk about today. We're going to fly through this video, so keep up with us here. So, here we go. This first article is actually on our website, on our homepage, and it is the cheapest asset in the world. And this came out late last week, but it's still on our homepage. You can see it under the originals column. And basically, what I did here was I compared the 1980 price for silver to basically everything else you could possibly invest in. I compared it to metals. I compared it to commodities. I compared it to energy. I compared it to stocks, to real estate, even Bitcoin. And for the most part, silver is cheaper than any other asset because it's just not kept up with, even returned to its 1980 high, whereas everything else from its 1980 high is far higher. So, Mike, what do you make of that? What's your reaction? Is silver the cheapest asset in the world?
Yeah, well, one of the cheapest. I don't know if you don't have computer chips in here. That's something that has gotten cheaper, but that's because of technological development. Computer chips were in their infancy back then. Other than that, I mean, I challenge the viewers to try and find things that are cheaper today than they were in 1980. Everything is about 10 times more expensive due to inflation of the currency supply. And silver being still selling at a discount. I mean, it's basically, it's close to half of its 1980 price. That's like insane. And we're using more and more and more silver. You did another article recently about all of the technological uses that silver is having right now, and that's how that's increasing. And then on top of that, the discoveries that we've had as far as the size of the deposits and so on, the discoveries are waning at a time when demand is increasing, and it's still below its 1980 price. It's insane.
It's insane. And that really highlights the opportunity. The only things I could find, Mike, were computer chips, but of course, that's hard to invest in. And maybe the price of debt, bonds. Bond prices are lower than they were 30, 40 years ago. But of course, yields are horrible. So, on to the next thing here. This is a tweet from our friend Peter Spina. Mike and I have known Peter for a long time. He says, great to see this shift here from SLV to PSLV. PSLV being Sprott's Physical Silver Trust. Now, during the next move higher, there's a greater awareness of which silver ETFs to avoid and which ones to trust. And he references a tweet here also, Mike, from Der Gold Report. And he says, update on the silver ETFs yesterday. And now this would have been Monday. The SLV saw another outflow of 6.9 million ounces. That's the abbreviation in German, by the way, for million. So it's 6.5 million ounces, while PSLV saw another strong inflow of 2.3 million ounces. On balance, we now see over the past 4 weeks that SLV has had large outflows, while PSLV has seen decent inflows. And he highlights a table here, which is great. There's a lot to it, but if you just go over to the far right, the 4-week change, and you'll see there the first yellow highlighted item there is SLV. Its holdings over the past month are down 10%. Down to the next yellow highlight, that's PSLV, Sprott's Fund, and their holdings are up 25%. So, Mike, what do you make of this trend here?
Yeah, almost 26%. I think this is phenomenal. I think Eric's, when you read the prospectus and the 10K filings for SLV and GLD, the big ETFs that exist for gold and silver, they're both written, and these are written by armies of the world's best attorneys, because these are the biggest banks in the world doing this. And they have, if you really look at them closely with an eye toward how could these guys be cheating me? How could they be setting it up so that they can defend if they fail to perform as this prospectus is saying? How could this be written so that they will not lose in court. And you'll see punctuations that don't seem to make sense to you. You'll see sentences where if you analyze them, it either means the opposite of what you think it means the first time you read it, or it means two things, or it means nothing at all. And it's just all through their prospectus and their 10K filings. And so I've never trusted these things. Shorting them, they've got decent short positions on them. And I warned about this in my book. There was one particular sentence in their prospectus for SLV that really hit me. That, wow, these are just shares and they have nothing to do with physical silver necessarily. It said that in certain cases of market illiquidity conditions, the price of the iShares may diverge from the price of silver and fall. If it's silver, how can it diverge from the price of silver? It can't. That's just not possible. So, Eric Sprott has done a very good job, I believe, of creating a closed-end fund. And a closed-end fund is they buy a specific amount of silver, and then they sell shares of that silver. And just through normal trading, it either trades at a premium or a discount to the underlying asset, the silver that's in there. And when the premium gets up high enough, they go out and buy a whole bunch more. And they issue more shares to go with what they've just bought, and that brings the price back down near the price of silver. And so, but they're only issuing the number of shares that they have with the I just trust Eric Sprott's thing a lot more. However, having said all of that, the best thing I believe is to just own your own physical gold and silver. And if you don't want to take delivery of it, it makes it a little easier to be able to buy it with a ticker symbol on a brokerage platform. But it's just as easy to go to a website of a good, trusted precious metals online dealer, create an account, and buy it there. And, I was the first one to create storage accounts that were third-party storage accounts where it's being stored by Brinks or another brand name of vault, trusted names. Brinks is more than 100 years old. I think it's more than 150 years old at this point. And they've got a motto: nobody has ever lost a penny with Brinks. So if you want gold or silver that is as liquid as it is on these trading platforms, but it's all real gold and silver in your name, it's not shares in a fund, I just think it's best to do it through a precious metals dealer. Any comments on that, Jeff?
Well, I'm all about physical, just like you, Mike. And so I believe in creating my own trust instead of trusting in somebody else's trust. And so that's why I own physical only. That's really all I want to own. So on to the next one here, Mike. This is from our friend Craig Hemke of TF Metals Report. He says, "This is so outrageous. COMEX Silver has at least one $2.50 down day per month for 6 consecutive months, and nothing but silence from the CFTC." That's the Commodity Futures Trading Commission, the regulator of the COMEX. COMEX Silver has one single $2.50 up day, and suddenly, quote, "retail traders must be investigated." And he has a great chart here, Mike, that shows all these big down days. And they're labeled not manipulation. There was nothing but silence, like he said, from the CFTC. And then he has the one up day there where all of a sudden the CFTC is saying this might be manipulation. So he really calls them out.
And I do believe that up day was a manipulation. The down days may be manipulations. They may not be manipulations. I'm really not sure. What would be interesting is to see how these big down days line up with the maturity of futures contracts and stuff. Are there certain things that mature on dates where the price move tends to be very large and goes right into a price range that sort of neutralizes profits that somebody could have made if the price stayed where it was the day before. Now, there is, however, an old saying, the bull climbs the stairs and the bear jumps out the window. Typically, whenever there's a crash in something, it happens much faster than the gains. It takes a long time to make gains, it takes a very short time to give them back. The biggest one-day crash in history globally was the 1987 stock market crash. And that really didn't have anything to do with manipulation, other than some people think that it could be the very early black box computer trading that helped to aggravate that crash. But I can tell you that the one day that was manipulated here is that green up candle that says manipulation. It's not necessarily manipulated by the Wall Street silver crowd or people rushing into silver. It got capped so that it wouldn't pierce that $30 level. If it had closed above $30, the technicals say that it could have run a lot further, and it probably would have attracted a whole lot more currency into that market, pushing it much, much higher. But you can push it back down by adding on paper shorts. Now, they're trying to do a short squeeze on the commercial shorts, but I think that some people don't realize that not all of these shorts are naked. Much of the commercial short position is because somebody is sitting on silver somewhere, and these big commercial banks are doing this on behalf of one of their customers. They're selling short to neutralize the price. You own silver and you owe silver. And when the price goes up, they basically do this and they net out to the same price. That's the reason that a dealer can buy silver at 15 bucks and sell it at 30 and make a 1% spread, or they can buy it at 30 and sell it at 15 and still make a 1% spread. This is just normal market activity. So the commercials actually should have, they should be net short, and they should, that those short positions, like I said, they're not all naked. But I can pretty much guarantee you that on that day where silver took off because a whole bunch of people wanted to buy it, buying something is legitimate. It's honest. Short selling and short selling stuff that isn't covered, that where you're selling silver that doesn't exist, that to me is sort of, morally iffy. So, but behind this article, there's a Bloomberg law.com article that refers to the potential of the retail investors being investigated, the Wall Street silver crowd being investigated for manipulating the silver market. And what that would lead to is a bunch of new rules that tip the scales even further toward the status quo, the big currency people, the people that sort of control things, the brokerage houses, the big banks. And I don't want to see that happen. But this is just an excuse. I think they're investigating the wrong crowd. What do you think, Jeff?
Yeah, obviously they are. And that article that Craig also links to in his tweet, you can see there, they talk about how the retail traders could be potentially prosecuted under an anti-manipulation or anti-fraud theory. So that seems pretty ridiculous and impractical. And, they're not prosecuting the other ones all that often. So that are capping the price.
Between this and the Wall Street Bets crowd that did the GameStop short squeeze, I think that the regulators may find some way to limit the ability of the small investors to play on the same level playing field with the big houses. However, you're getting, when you start dealing in options and futures, and you're using leverage, you're getting into an area of professionals. And when amateurs come into the area where professionals run the game, they usually get cleaned out. I mean, GameStop was a spectacular spike, but then it fell. Who were the owners of the shares when it peaked, and who was short when it fell back down? And my guess is that there were more professionals that were short, making big gains as it fell. And the big losers were probably the retail community, small investors trying to make a sudden killing. And so, however, I want to say that the Wall Street silver people, this is a smart crowd. They are very well informed, and they're spreading this education, this information among a lot of people. And so my hat is off to them. They're doing a great job. So hang in there with it. Just know that this silver thing, the silver story, it's a longer term thing, and the real fireworks are going to come when there's monetary demand, and that comes with a crisis. And there is always another crisis somewhere around the corner. So it's something that is inevitable someday. You just have to hang in there. So short-term, get-rich-quick currency that comes into the market, and then if it doesn't happen, it leaves, that could actually do some damage to this. There's been a lot of inflows into the silver arena because of the Reddit crowd and the information that's spreading. But a lot of those inflows are this short-term currency. And if the commercials go short on top of that to suppress the price, and then the get-rich-quick currency in there, when those people get tired and they decide to leave, there's outflows, and that's when the price falls. That's when the commercials end up winning, and we just have to wait longer. But I just want everybody that's in this silver rush to know that this is inevitable. There will be far, far higher prices for silver one day. I believe that it comes with a currency crisis, a financial crisis, a banking crisis. And when it does come, having silver is not only potentially enormous profits, but it's protection.
Yes, absolutely. It really is great to see more and more people getting educated and learning about silver. So that's been one very positive development to all this. Just hang in there, don't give up, because like Mike says, in the big picture, we think silver is going to go a lot higher. So, well, Mike, here's a reader comment from Daniel R. And this was a few days ago. He says, I loved hearing all of Adam's, quote, money violations. He's referring to Adam Taggart of Peak Prosperity, who was on with us last week. And Adam used the word money when he meant currency. And he got gonged for that a couple times. I kept laughing, and my wife thought I was crazy, but I'm all for Mike's suggestion that we use the terms money and currency correctly. It'll just take us a while to get it right.
Yeah, I wrote about this in the book that you and I have been writing, The Great Gold and Silver Rush of the 21st Century. And so I want to read you a couple of paragraphs here. But, I've been trying to do this myself for so long, and it is so hard. And I just decided one day, I knew the difference between money and currency, and I decided I was going to commit myself to communicating properly and define the difference between these things. And so this is from the book. Money must be a store of value. Gold and silver have maintained their value throughout the centuries, and so they are the only currencies we can call money. Fiat currency is not, has never been, and will never be money. Treat this truth like gospel, and you'll be ahead of 99.9% of the population. From now on, every time you open your wallet to use some debt-based currency, just stop a moment and think about how incredibly stupid the whole concept is. I've been doing this for many, many years now, and it has instilled in me a total contempt for currency, but an ultimate respect for money. So I hereby challenge you to please, from now on, use the proper terminology and differentiate the difference between currency and money. Never again use the term money when you're referring to the dollar, yen, euro, or pound. It's really hard to do. I know because I've been trying to use the proper definitions since 2006, and I still make mistakes once in a while, but I always correct myself. Also, if you're reading an article or listening to someone on finance or economics, and they use the term money when they're actually referring to currency, please realize that the pundit may not have a full grasp of the topic. If you have the opportunity, please let them know how hard you are working to try to use proper definitions and ask them if they would consider doing the same. If we want to achieve truth and understanding, we must choose our words wisely. As J.P. Morgan famously said, gold is money, everything else is credit. Once the general public is aware of this fact, the great gold and silver rush of the 21st century will be over with, and along with it, the great opportunity. So I wrote that quite a while ago, but it's true. And I think everybody should take the pledge.
Yes, exactly. We're going to come up with a pledge here one of these days. We'll all take it so we can distinguish between money and currency. And, when you start referring to gold and silver as money and you understand that, it sure makes you feel a whole lot better about buying it. And it kind of answers the question for you about even how much you should buy and how long you should hold it. So it really does make a difference when you view it in the proper context. So, well, Mike, we'll close out this video with you reading the meme of the day. But before we do that, just a reminder to sign up for our newsletter. That article we talked about at the beginning of the video is on our website. And if something ever happens to YouTube or our videos on YouTube, you'll still get our articles if you sign up for our newsletter. All of our articles, our research, Mike's videos, everything. So sign up for our newsletter there, the link's below, so you make sure you get everything no matter what happens to YouTube. So, well, Mike, close out this video for us with the meme of the day.
Okay, this is hilarious. This picture with this little boy and the look on his face, and he says, "So you're telling me I can buy real money with fake money?" And what he really means here is, so you're telling me I can buy real money with currency?
You're right.
Because currency is fake money. And then this is a two-parter, this meme. The next one is this little girl, and the look on her face is great also. Me leaving the coin shop before they realized I gave them paper for silver. These are great. So I want to thank you, Jeff. It was great.
This was a great video. Thank you, Mike. And I will see you tomorrow.
Okay. See you then.